In the first 3 months of 2026, the President of the United States made more than 3,700 individual stock trades, over 60 trades on every single market day.
Those trades are worth between $220 million and $750 million. Think about the sheer scale of that volume. We're talking about hundreds of millions of dollars moving actively across the market, all while the highest office in the country governs the economy.
Every company in that portfolio, Dell, Micron, Boeing, Nvidia, Apple, received a presidential announcement or policy decision shortly after the trades were made. Every single one of those trades was filed in a public document on a government website, available to anyone for free. And nobody told you how to read it. In this video, I am going to show you 5 of those trades and exactly what was in the public record before the market moved.
You're watching Voice on Pages, where capital logic replaces capital noise. Subscribe if you think in systems.
Let's establish a structural baseline. From the 1970s right on through the Obama years, presidents followed a very specific norm. They either parked their wealth in blind trusts or they stripped it all the way down to plain old treasuries and index funds. They deliberately took themselves out of active market participation to dodge any conflicts. Trump reversed this norm, and he did it entirely legally. His wealth sits in the Donald J. Trump Revocable Trust. His family manages it. It's not blind. He knows exactly what he owns, and he actively trades individual stocks. He's managing a massive portfolio while making top-level policy decisions, creating a pretty intense intersection of power and capital.
You might be wondering, how is this legal? Well, look at 18 U.S.C. Section 208. It's the absolute core conflict of interest law covering every other official in the executive branch. If you work in a federal agency, this law strictly dictates what you can and cannot own. But the president? He holds a written legal exemption from it. It's not a loophole. It is literally the written law. Congress built the system this way. That system grants the president total legal authority to hold and trade individual equities.
That is the system. Now let us look at what it produced. Track this timeline, because the mechanics are incredibly precise. On February 10th, Trump buys up to $5 million in Dell at around $126 a share. He files the position in a public disclosure, so the record exists for anyone to find, just sitting quietly on a government server. Months pass. Then, on May 8th, he hosts a White House event with Michael Dell. He stands right at the presidential podium and tells the American public to go out and buy a Dell. The market reacts instantly. The stock jumps 12 to 15% straight to an all-time high. By May 27th, Dell crosses $300. That position more than doubled. We're talking a 2.4x return in under 4 months. The purchase happens, the filing drops, the announcement follows, the capital multiplies.
Trade 1.
4 more.
Next up is Micron. Between March 2nd and March 25th, Trump executes multiple Micron purchases, easily ranging into the hundreds of thousands of dollars. He marks them as unsolicited, meaning they were client-initiated, not broker-directed. He files them right into the public record. Then, boom, the catalyst arrives. On March 26th, he calls Fox News. He pumps Micron on national television, calling it one of the hottest companies. The retail market absorbs the news. Institutional capital floods in. By late May, Micron roughly doubles, hitting a staggering $1 trillion market cap. It's a massive wealth generation event, triggered just weeks after those initial public filings.
Same pattern. Now a trip to China.
He already holds Boeing shares. The capital is deployed. He then travels to China with 18 highly influential CEOs, and guess who he brings in his direct delegation for major international trade negotiations? Boeing CEO. He returns with a massive announcement. China agrees to buy 200 Boeing planes, with a potential for 750 in total. Oh, and the deal specifically requires GE engines. The market instantly digests this multi-billion-dollar aerospace order. He held the stock before the trip. The public filing existed before the announcement. The entire sequence operates perfectly out in the open.
Now, it gets personal.
The crucial point here is Nvidia. The filings show he holds up to $6 million in Nvidia stock. We're talking about the company making the world's most advanced AI chips. It's the literal engine of the global artificial intelligence boom. He then personally approves Nvidia chip exports to China. This represents a direct, highly consequential presidential regulatory decision, a decision that opens up an absolutely massive revenue stream for the company. And again, the multi-million-dollar position existed and sat completely public before he gave the approval. The regulatory gatekeeper owned the asset before opening the gate. Watching from India? This one is for you.
Trump hosts a White House event and publicly praises Apple and Tim Cook. He commands the global media cycle, drawing all attention to the tech giant. On that exact same day, an unsolicited Apple stock buy of up to $500,000 hits the wire. Total March Apple buys range between $2 million and $7.2 million. The alignment is undeniable. He filed all 5 trades. All 5 sat completely public. Anyone tracking the official government disclosure portal could see the capital positioning right before the subsequent market-moving events took place.
But here's the legal trap. The Stock Act technically binds him to a 45-day disclosure clock. Lawmakers designed this timeline specifically to create transparency, but the system completely breaks down at the enforcement level. If you file months late on up to $750 million in trades, you know what the penalty is? A microscopic $200 fine. Not $200,000, just $200. For a portfolio moving hundreds of millions of dollars based on macroeconomic policy, that fine operates as a basic administrative fee. It's certainly not a deterrent.
Lawmakers clearly see the pattern. The Ethics Act, which is a bipartisan congressional bill, aims to ban presidential stock trading entirely and heavily raise those fines. It's essentially an attempt to build a massive firewall between presidential authority and personal portfolio management. It represents this generation's biggest attempt to rewrite the conflict of interest baseline. But it faces one severe problem. It is not yet law. Until it passes, the current structure remains fully intact and entirely legal.
Capital doesn't follow safety. It follows logic over loyalty. We mapped these exact mechanics in our Trump-India tariffs video, showing the exact same policy market pattern. We also broke down who reads signals first in our BlackRock $50 trillion video. The framework remains exactly the same. Institutional money moves based on predefined structures. Once you understand the system governing the information flow, you understand the market.
The global impact here is massive. Indian individuals sent nearly $2 billion abroad between January and October 2025. That represents a 50% increase in capital flight, and a huge percentage of that capital directly targets United States stocks. This is retail money, individual savings crossing borders to chase returns in the American market, flowing straight toward the largest tech monopolies on Earth.
Platforms like IndyMoney, Grow, and soon Zerodha give direct access. They completely remove the friction for retail capital, but they absolutely do not solve the information asymmetry. Think about it. When Indian retail investors buy and hold Nvidia, and the US president buys Nvidia right before personally approving a massive export deal, those retail investors sit completely blind on the other side of an immense information gap. You are literally trading against entities that dictate the rules of the game.
We built a free tool, the Signal Analyzer. Paste any headline and it decodes the capital, economics, and geopolitics behind it. The mechanics most people never see. Link in description.
The big illusion here is secrecy. The real barrier? It's just formatting. To find this data, you have to navigate the Office of Government Ethics website. You open 100-page PDFs, you read vague value ranges instead of exact dollar amounts, you hunt down filings submitted months late, you hit zero-ticker search functions. It takes immense manual effort. Anyone can access them, but the structural friction keeps the broader market completely in the dark. The data hides right in plain sight, buried under a mountain of administrative paperwork.
The method we use to decode these 5 trades is in the Signal Extraction Method Guide, 10 chapters. Link below.
Because in the end, capital doesn't have loyalty. It has logic.